The new tax year started on the 6th of April 2026. And if you're an employee on PAYE, you might be wondering, what's actually changed? What do I need to know? The honest answer is that the headline rates look the same as last year. But that's actually part of the problem. So in this video, I'm going to walk you through everything that's changed, everything that hasn't, and most importantly, what it means for your actual take-home pay. Let's start with income tax. The personal allowance is still £12,570. The basic rate is still 20% up to £50,270, and the higher rate is still 40% above that. Nothing has moved. But here's the issue. Those thresholds have been frozen since 2021 and won't change until at least 2030/31. And while the thresholds stay the same, wages are rising. So every pay rise you get is taxed in full, at 20%, 40% or more, without any compensating increase in your tax-free amount. Economists call this fiscal drag. The government is collecting more tax revenue every year without formally raising the rates. The OBR estimates the freeze is equivalent to a 2 to 3% income tax rate increase for the average worker over its duration. So even though the rates haven't changed, if your salary has gone up since last year, you are paying more. National insurance for employees is also unchanged. 8% on earnings between $12,570 and $50,270, 2% above that. No change from last year. Now, what has actually changed? The national living wage went up from the 1st of April 2026. If you're 21 or over, the new rate is £12.71 an hour, up from £12.21. That's a 4.1% increase, about £977 a year for someone working full-time. If you're 18 to 20, the rate has risen even more sharply, up 8.5% to £10.85. That's part of the government's longer-term plan to bring the rates closer together for all adults. Student loan repayment thresholds have also changed. If you're on Plan 1, the threshold is now £26,900. Plan 2 is now £29,385. These have both risen from last year's figures. There's also a brand new Plan 5, which starts from April 2026. It applies to students who started university in England from September 2023 onwards. The repayment threshold for Plan 5 is £25,000, lower than Plan 2, so if you started recently, check which plan you're on. Statutory pay rates have gone up too. Statutory maternity pay, paternity pay, and shared parental pay in weeks 7 to 39 are now £194.32 a week, up from £187.18. And there's a significant change to statutory sick pay. Previously, you had to earn at least £125 a week to qualify for SSP. That eligibility threshold has been completely removed from April 2026. Now, all employees are entitled to statutory sick pay regardless of how much they earn. Two changes to be aware of around home working. First, employees can no longer claim tax relief directly from HMRC for working from home costs. That's £6 a week flat rate, gone from April 2026. Employers can still reimburse employees tax-free, but if your employer doesn't do that, you can't claim it yourself anymore. The flip side is that from April 2026, if your employer does want to reimburse you for a flu vaccine, an eye test, or home working equipment, they can now do that tax-free, even if you paid for it yourself first. Under the old rules, the employer had to pay the supplier directly. That restriction is removed. And finally, Making Tax Digital went live on the 6th of April 2026 for self-employed people and landlords with income over £50,000. They now have to keep digital records and submit quarterly updates to HMRC. This doesn't affect employees on PAYE, but if you have any self-employment or rental income above that threshold on top of your job, it applies to you. So to summarise what's actually changed this year, the national living wage is up, student loan thresholds have moved, statutory pay rates have increased, SSP is now available to all employees, the home working flat rate is gone, and Making Tax Digital is live for higher earning self-employed people and landlords. What hasn't changed? Your income tax rates and bands, your employee national insurance, pension auto-enrollment contributions, and ISA limits. If your salary has gone up since last year, use the free OS Payroll Salary Calculator to see exactly what you should be taking home now. It's updated for all 2026/27 rates, Covers student loan plans, pensions, Scottish rates, and tax codes. Link in the description. If this was useful, give it a like and subscribe. We cover everything about UK pay, tax, and payroll. See you in the next one.